Hey, what's up, everybody? Welcome to episode number 184 here on Season 1. Today we are getting into artificial intelligence meets an ETF. This ETF comes from Equbot. The ticker is listed as AIEQ. But let's go ahead and just look at the website real quick. I just bought a share of this today, and I found out about it today just because I was researching different ETFs to buy into. And this one struck like I had researched AI ETF or whatever, an ETF that not utilizes AI, but an ETF that invests into companies that utilize AI technology or developing AI technology. So, anyways, I ran across this, and this AI technology, which basically what it is it uses AI technology to help you grow your capital investments or whatever it is by investing into U.S. stocks and real estate investment trusts. And so this AI technology is proprietary to them. They have their algorithm set up, then they leverage the IBM Watson AI computer, and thus it starts machine learning and that kind of stuff and continually learns about the market. And so you should get a greater return as the AI bot continues to learn how the stock market works. The inception date on this was 2 months ago, almost to the day. Right now it's 12/12, and it was incepted on 10/18, and the IPO was around $25 or so. So, like I already said, they use their proprietary quantitative methods and developed by Equbot, and then they pair it with IBM's Watson artificial intelligence. All this kind of good stuff. I will link this up so that you can watch this video. It does a really good job of explaining it, basically 1 minute or less, but I don't have time for that. Let's go ahead and look at the fund performance real quick, which is right here. So far since inception, it's up 2.65%, and I will go actually look at the charts on Yahoo Finance so that you guys can see that. The fund summary here, the overall net assets, they have about $80 million, blah, 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 blah. They don't offer a dividend, but obviously if they're in a trade when a dividend is paid, then you get paid a little bit of that dividend as well. The close today was $25.69, and I believe I got in at like $29.70-ish or so. So it went up like 9 cents today, which is pretty good. These are the fund holdings. So the nice thing about this is this gets updated every single day. So it basically will change. This will change tomorrow. Like literally, I was on the page 2 minutes ago. Actually, I could probably pull it up. I think I was, yeah, right. One of these ones. I don't know why I need a contact. And then it's like all of them are same thing. Okay, I don't know what the heck went on there. But anyways, Amazon was down here, and it just shot up this way. So Amazon is now the second largest holding company, which is great. But you can download all the holdings right here. Usually they hold anywhere between 30 and 70 different holdings on that ETF. So we've seen that. Now we need to go here. Exchange traded, the power. This gives you a little bit of rundown of how IBM Watson works. Basically, it's machine learning. So they program it how to read the different tickers, like fundamental analysis, technical analysis, and then also their proprietary analysis of the market. And then they program all that into IBM, the Watson, and outspits the percentages of what they should buy and this and that. And then if they get it wrong, they go in and readjust, and it continues to learn and continues to learn and continues to learn until basically some level it should become perfect. This is a little bit about the Equbot advantage. I'll get into this on a different page because it's a little like fact sheet right here, which is what I wanted to talk about. So right now it's listed as AIEQ. It basically seeks long-term appreciation within the risk constraints consumed with broad market U.S. equities. It uses their proprietary algorithms and artificial intelligence, which can process over 1 million pieces of information per day to build a predictive financial model. Approximately 6,000 U.S. companies is what it tracks. And I told you about the 30 to 70 talks already and this and that. And then, like I said, it does disclose the portfolio holdings daily, which is nice. Like I already said, this is kind of like the key highlights. It removes the human bias and error, which I think is nice because computers aren't emotionally driven at all. And so a human might stay in a trade because they're emotionally attached to that trade or whatever it is. And so it gets rid of those errors that happen. It basically comes down to computer number crunching and percentages and prediction and that kind of thing. Like I said, it does combine fundamental, technical, and their proprietary investment efficiency analysis to identify high opportunities with long-term growth. And then artificial intelligence basically continues to build upon itself. The financial knowledge should increase in the system, in the investment system, which would inevitably grow in value. So that's what I think their main bank is on. But let's go ahead and look at the quick charts here. I got a little Kettner channels and Bollinger Bands on here. Right there was this little spike. But anyways, I don't know why I just zoomed out. So let's go to the 1 month. In 1 month, basically, it climbed from here of a price of $24.28 to now $25.80. So it went up basically $2, almost actually $1.50 about, and that would be basically about a 5-6% return just in a month. In 3 months since the inception, it's not up that high. It went up. It opened. Their IPO was at $25.18, and now it's at $25.80. So what I believe happened was a lot of people got in because of the technology, and so the bulls obviously bulled it up a little bit. And then we've seen a steady drop by people trying to short it because that's what happens. And then next thing you know, we're seeing finally a steady run. And I think that this is going to continue for a while. That's my personal opinion on that. So as far right now, I do have one share of them. I do plan on investing a little bit more into them. This is probably one of the ETFs that I'll continue looking at going into 2018. It's really new, so it might be a little bit risky, so I would just say make sure that you use the proper risk assessment when looking at an ETF like this. But I think that the technology is there, and I'm so happy that somebody actually made the first move into developing an ETF that does utilize artificial intelligence technology. So like, if I could jump up and down right now, I would, because this is something that I've wanted to do. I actually started trying to learn code so that I could develop this kind of system and utilize artificial intelligence to trade on the stock market. It's awesome to see that I don't have to do that as much anymore, and I can utilize an ETF that does that already. But let's go ahead and dive into the question of the day, which is, what do you typically have for breakfast? And I typically eat either cereal or oatmeal. Lately, I've been eating this chocolate cereal. It's like chocolate cocoa crisp or something like that kind of thing. That with a little bit of almond milk because my stomach doesn't really like cow's milk. And yeah, so that's what I've been eating for breakfast. Hey, what do you know? Anyways, if you guys have any questions regarding Stash, Acorns, Robinhood, as well as general investing advice, business, Etsy, coaching, post those questions down below, and I will try to get them on the next episode. If you like these kind of videos where I do dive into a different ETF or whatever, let me know by smashing that like button, and I'll try to do these more regularly. And as always, don't forget to subscribe up here in this corner and check out my Robinhood Recap November edition. Check out this other video right here. And as always, thank you for watching. I really appreciate it.